Welcome to the Capital News. I'm your host, Alex Karitis. Today is Tuesday, February 23rd, 2021. Thank you so much for joining me. The title of today's podcast, These Markets Are a Joke. That's putting it mildly. That could be a podcast title almost any day of the week. But we saw some big swings intraday across all of the major averages. We're going to get to that. So market performance is a topic of today. Tesla and Bitcoin will be a little bit of the discussion. They took some big hits, both of them respectively, but well off of their lows that were seen earlier in the day. Of course, Chairman Jay Powell of the Federal Reserve was testifying this morning before the Senate Banking Committee, so we'll read an article out of the Financial Times with respect to that conversation that he was having, and then some stories that are circulating out there with respect to the $1.9 trillion monstrosity that no Republican, at least no Republican senator, is likely going to vote for the $1.9 trillion monstrosity, which is a good thing, but this just shows the hypocrisy, really, of the Republican Party. I mean, they were in power last year, and they had no problem whatsoever spending $5 trillion that we didn't have. They had no problem begging, borrowing, and printing $5 trillion into existence. Their principles were out the window. They didn't care. Remember? 96-0. No votes for America. I told you, I'm never going to let you forget this. 96-0, no votes for America. That was the Nobody Cares Act. There was a subsequent vote for another bill, 99-0. Okay? So now the Republicans, of course, are no longer in power. So now they get to act like the principled old Republican Party that they pretend that they are. Oh, we have to be fiscally conservative. Oh, we have to be concerned about future prosperity. Oh, we have to be concerned about young people paying for this because this isn't their fault. That's not the right moral, ethical thing to do. We can't do that. Didn't stop them with $5 trillion. Where are they all of a sudden concerned with $1.9 trillion now? Oh, that's right. They no longer have power. You see how simple this is? They take you for suckers and fools and idiots. The Republican Party does it, and so do the Democrats. I have no sympathy or respect for either of these parties. Have you left them? I've been saying this for well over a year, to leave these parties. This is as peaceful a revolution as you can have to start this process, to leave them. You don't have to leave your house. Change your voter registration. Become a libertarian, an independent, unaffiliated. Leave the two-party system. These people do not care about you. I don't know how much more you need to see, how much more you need to hear, how much more you need to read about. They do not care about you. What they are good at is putting on a show. What they are good at is repeating lines over and over and over again. And because there's nothing on TV and people watch the news 24/7, well, you get brainwashed. And of course, it's groupthink. There's confirmation bias. And people like to be social. People like to be a part of a group. So, well, you have a political philosophy that leans more towards the Republican Party, so there you have it. You'll tolerate it. Or you have a political philosophy that leans more towards the left and the Democrats, oh, so you tolerate it. And in the meantime, the country is collapsing. The economy is collapsing. Society is a joke. Our markets are a joke. They're a laughingstock. And that's globally. That's not just here in this country, but my God, we're supposed to be above the insanity. We're supposed to be the ones that believe in the rule of law. We're supposed to be the ones that believe and practice free market capitalism. But we're not, and we don't, and we're not, and we don't. And it's only going to get worse from here. I hate to say it. So first to some market performance. We have the dollar index at 90.144, 90.144. Bitcoin at $50,300 per coin. It was below $50,000 earlier in the day's trading session. Overnight futures trading, we have the Dow Jones Industrial Average down about 0.5%. The S&P 500 is down about 0.2%, and the Nasdaq 100 is giving back 1.2% in overnight futures trading. So a continuation of the sell-off with respect to these markets. Of course, the bounce back that we saw today with respect to the S&P 500 and the Dow was incredible. Even with the Nasdaq and the Russell 2000, the small cap index, closed well off of their lows earlier that were experienced earlier in the trading session. Of course, a lot of this was off the back of the testimony from Jay Powell. Cash trade in Japan giving back 1.7%, down 1.7%, a mixed bag across the pond in Europe. Australian cash trade giving back 0.9%, and Chinese stocks also falling slightly over 2% for the day. Since we saw a lot of destruction in the Nasdaq, at least earlier in the day, a lot of that was attributed to Tesla's decline. Also, well off of its lows. I think it hit $614 per share at its low during the day's session. However, it was able to close at $698. So that's a big swing in and of itself right there. Earlier in the day's trading session, Tesla was actually trading below where it was when it entered the S&P 500, I believe, back in December 18th. Okay, so look, ladies and gentlemen, I've been saying it here for months that the poster child of this everything bubble, virtually everything bubble, is going to be Tesla. Some of these other electric vehicle stocks, the SPACs, these special purpose acquisition companies, Bitcoin. These are the poster children, okay? Bankrupt companies that end up trading at $10, $15, $20 a share because a bunch of people who don't know what the hell they're doing finally figure out, oh, I can gamble in the stock market and it's trading at $1. Yeah, it's trading at $1 a share, genius, because they're going bankrupt. Well, they don't know that. Why let the facts get in the way of attempting to run up a stock? A pump and dump scheme, a joke. And of course, it leaves a lot more people devastated in the wake as opposed to benefiting anybody. This is why these markets are a joke. And of course, this is only possible because our fearless leaders, these idiots in Washington, D.C., our politicians and our central bankers and other bureaucrats get together and say, oh, yeah, well, we don't have $5, $6, $7 trillion, but who cares? Who cares? Let's have somebody else pay for it. Let's have future generations who don't even exist. Let them pay for it. That'll be their problem when they become adults and part of the voting public. That'll be their problem to solve. Well, here we have to deal with us. So let's steal from them so we can make things look good today. And it's only going to be temporary, of course. Free was never so expensive. So despite the fact that Republicans are going to stand up tough and pretend that they have a spine and pretend that they give a damn all of a sudden, this thing's likely going to pass. It'll still get Democratic support. Maybe it won't be in one fell swoop. It very well could be. But the $1.9 trillion in some form or another is going to make its way into the system. The question is, how do markets respond to it? And I'm going to do another capital economics presentation on this, another monetary measures part 2, looking at how money supply, the Fed's balance sheet, etc., has been impacting the stock market. How these things are trading and moving in tandem. Okay? You want to talk about a joke? Wait till you see these charts and graphs. You thought the other ones were bad, and they are. Monetary measures part 1. Wait till you see this stuff. It's just, it disgusts me to no end, but that's what I do. Can't help myself. On the commodity front, we have WTI trading at $61.08 a barrel, Brent at $65, natural gas $2.83. Gold and silver also pulled back today. Gold at $1,807 an ounce, so still maintaining $1,800, and silver at $27.57. So a pullback from that 28 handle, but still in that strong consolidation of where we've seen for a while here at the 27 handle. Uncle Sam's 10-year junk note is yielding 1.33%. Okay, so that rounds it out. And of course, bond yields, Treasury yields across the curve, but particularly at the longer end, the 10-year note, the 30-year long bond, that's where we want to pay attention to. That's what we've been paying attention to. And of course, if these yields continue to go up, that's going to put some pressure on stocks. That's what we're continuing to monitor. And of course, the Federal Reserve is well aware of this. And that's why you have the soothsayer Jay Powell coming out trying to calm these markets down. And let's get to that right now. Article out of the Financial Times. So here's the title, the headline of this article: Powell signals hope for return to more normal conditions. So here you have it. We have an extremely powerful policymaker basically making a strategy based off of hope. All right, right there, it's no good. Right there, it's junk. We don't need to have a strategy based on hope. Okay, there is this thing called free market capitalism, which we know works. So we don't have to hope that it works. We know that it works. We know that our Constitution can stand the test of time, and if it's really allowed to do what it can do, that in conjunction with free market capitalism really opens the floodgates for the entrepreneurial spirit to take root, for true productive growth to occur, and for a rising tide to lift all boats. That's how it's supposed to work. That's not hope. What we have to hope for is that these idiots who got us into this mess are somehow going to pull us out of it. And they're not. Okay? And they know it. They know they're trapped. And that's why they're using hope as their strategy. We hope that the rest of the world, we hope that the markets buy into our BS narratives. And for the most part, for the past several years, they have been. So who's really the bigger idiot? Is it them or is it us, the broader marketplace? That's another joke. That's another problem we have here. You want to talk about a strategy? Get rid of the Fed. Get rid of the income tax, the federal income tax. Get rid of a slew of regulations. And you're off to the races. Let entrepreneurs and the people solve the problems, because we will. But here's the article. Jay Powell, the chairman of the Federal Reserve, has told Congress there was hope for a return to more normal conditions this year, but signaled that the central bank intended to maintain its heavy support of the economy. Of course, why wouldn't it? His comments pointed to no early Fed tightening of monetary policy or drawdown of asset purchases, even with a brighter economic outlook, and helped technology shares claw back most of their losses after a sharp fall during early trading in New York. Speaking to the Senate Banking Committee, Powell offered one of his more optimistic assessments of economic conditions since the start of the pandemic, but stressed that there are still big downside risks to the recovery that justify the central bank's ultra-easy stance. And don't forget, the Federal Reserve is committed to purchasing $120 billion per month of Treasuries and mortgage-backed securities through the remainder of this year as it stands today. So at that rate, we're going to have a Federal Reserve balance sheet north of $8.5 trillion. And of course, our analysis here is predicting that it could very easily hit $10 trillion, maybe more. In recent weeks, the number of new cases and hospitalizations has been falling, and ongoing vaccinations offer hope for a return to more normal conditions later this year. However, the economic recovery remains uneven and far from complete, and the path ahead is highly uncertain, Powell said in his opening remarks. While we should not underestimate the challenges we currently face, developments point to an improved outlook for later this year, he continued. The prospect for an improvement in the U.S. COVID-19 situation, combined with new large-scale fiscal stimulus backed by congressional Democrats and President Joe Biden, has prompted many economists to upgrade their growth forecasts for 2021. Again, this is a joke, too, because they're just basing their growth estimates off of what's going to happen to GDP. Well, GDP is being vastly manipulated. Again, it's just an arithmetic equation. Government spending, plus investment, plus consumption, plus net exports. That's it. You can manipulate government spending. You can throw more money, funny money, into people's pockets, not because of production, not because of true growth, not because there was strong savings, not because there was investment into the economy, but because Jay Powell and company, the tooth fairy sprinkling money all over the place. Oh, yeah, growth is going to go up. No. Inflation is going up. It already has. And we are going to see and feel its devastating force. Some economists have warned that a burst in economic activity could trigger an unhealthy jump in inflation, which would force the Fed to start tightening its monetary policy sooner and more abruptly than expected. The Nasdaq Composite fell by as much as 3.9% early today, on concerns higher rates would threaten the lofty valuations investors have placed on shares of fast-growing technology companies. But it recovered as Powell spoke and closed 0.5% lower. So there you have it, folks. These markets are a joke. You have, as it just stated here, the Nasdaq was down 3.9% and closed 0.5% lower. That's a huge swing. And of course, don't forget, Jay Powell says the Federal Reserve and their policies have nothing to do with asset prices and where stock prices have been and are going. But then why would this swing happen as this man is talking? Nothing else was going on. This is, all of a sudden somebody invented something that the world's never seen before. That wasn't breaking news today. No, it was just Jay Powell in front of the Senate Banking Committee. That's all it was. Making promises, hoping, saying, hey, we're not going to tighten monetary policy. We're going to keep the spigots open. That's a joke. In addressing inflation concerns, Fed officials have played down the threat of a jump in prices, saying it was unlikely to be sustained. Well, we're going to find out the hard way that's not the case. During the question and answer period with the senators, Powell said inflation dynamics did not change on a dime and said there really hasn't been lately a strong connection between budget deficits and inflation. There hasn't been lately. Famous last words, perhaps. And this guy has a lot of famous last words that are going to go down in the history books. Just like former chair Ben Bernanke saying, "Oh, there's no housing, there's no housing bubble. Any issues in subprime are contained." Famous last words. That's what these people are known for. Powell also pointed to unused capacity in the labor market, with nearly 10 million fewer Americans employed compared with a year ago, as one of the most worrying aspects of the U.S. economy. Before I continue, let me just go back to his statement with inflation dynamics did not change on a dime. Well, I showed you guys in a capital economics presentation, Monetary Measures, Part 1. Check it out, thecapitalnews.com, our YouTube channel, The Capital News. I showed you those charts and graphs where they go vertical. That's inflation changing on a dime. That's the Fed saying, oh, we need $3 trillion to fund the Nobody Cares Act. Not a problem. Changed on a dime. They do change on a dime. I get what he's saying, that the effects take time to make its way throughout the economy. That part's true, and it'll happen to different degrees. No doubt about that. But when you understand what inflation really is, an increase in the money supply, check out those graphs. It did change on a dime, and we're going to feel the repercussions of this for years to come. The Fed has said it would not raise interest rates from their current level close to zero until it achieved full employment. Inflation hit 2% and was on track to exceed that target, according to whose measures. It also said it would not begin to wind down its bond buying program until substantial further progress was made towards its objectives. That's the quote. Substantial further progress. What does that mean? In the stock market? In the economy? What is substantial further progress? Now, they use this type of vague language on purpose because they don't want to box themselves in, even though they are and have been trapped for past couple years as far as my analysis is concerned. But nonetheless, this is just part of the narrative. This is part of the story. Oh, yeah, we have made progress, but it hasn't been substantial. So we're going to continue with our bond buying program, etc., etc. They're just giving themselves room. The economy is a long way from our employment and inflation goals, even though it's on track, and it is likely to take some time for substantial further progress to be achieved. We will continue to clearly communicate our assessment of progress towards our goals well in advance of any change in the pace of purchases, the chairman said. That's another joke. Something could happen overnight and they'll change their song and dance. They do not clearly communicate anything except the fact that they are going to remain very accommodative. During the testimony, Powell was repeatedly pressed by senators on the merits of Biden's $1.9 trillion stimulus plan, but declined to take a position. When asked by John Kennedy, a Republican senator from Louisiana, if he would be, quote, cool with Congress not passing the stimulus bill, Powell responded, quote, that would be expressing an opinion. So that's what I'm not doing, is expressing an opinion, end quote. Financial markets have already started to factor in a rosier outlook. A sell-off in U.S. government bonds accelerated sharply last week. The 10-year Treasury note yielded 1.35% on Tuesday, up from 0.91% at the end of last year. Volatility in the Treasury market has risen, underlining the potential for larger swings in the weeks ahead. That's an understatement. So Jay Powell doesn't want to express an opinion of the $1.9 trillion stimulus plan when asked by Senator Kennedy of the state of Louisiana, who I like to call Senator Foghorn Leghorn. I say, boy. You ever see that guy? He's a character. We know that Jay Powell is in support of the $1.9 trillion stimulus plan. Now, he doesn't care what it's called, and he doesn't really care too much how much either. I mean, the bigger the better. We know this because he said so. He's been saying this for months. He was saying this during the Trump administration, during the last months of the Trump administration, that Congress has to do more, that the Nobody Cares Act 1.0 is running out of steam. It's expiring. You guys have to do more because the Federal Reserve only has so many tools. Of course, if the situation is right, that toolbox is never ending. It's a perpetual toolbox until the Fed needs to maneuver and change the narrative and say, oh, well, we're done. We can only do so much. Now it's up to you guys, Congress, to get your acts together, put a bill on the president's desk and have him sign it. And then we'll be glad to finance it. We'll be glad to buy all of those bills, notes, and bonds, whatever you have to issue. We'll be happy to purchase them. This is the back and forth that we're going to constantly see. This is the 1-2 punch from Janet Yellen at Treasury, Jay Powell at the Fed, and whoever else wants to get involved. The White House, Congress, what have you. This is far from over. This is just $1.9 trillion. We say this like it's nothing anymore. Wait for infrastructure. Wait for something with the environment, the Green New Deal. Wait for something with respect to healthcare. And God knows what else. You understand why I talk about the debt? You understand why I talk about the U.S. debt clock? Nearing 28 trillion, 50 trillion 4 years from now. And once they pass this thing, off to the races. Off to the races. But the question still remains, what will markets do? Will they buy into this narrative once again, as it has been? This buy the dip mantra. Anytime there's a pullback, just buy the dip because Aunt Janet, Uncle Jerome are going to be there to save us. Have no fears. Because that's what's been happening. I don't think they can do this forever. I think the day of reckoning is coming. I don't know if these are the first throws with this pullback that we're witnessing here over the past several trading sessions. I don't know. All I know is we are way overextended. All I know is valuations are through the roof. All I know is the only comparable periods with these valuations go back to the 1929 crash, the dot-com boom and bust, the housing boom and bust. I mean, this did not end well for most people. Yeah, if you were able to ride the train, ride the wave up, that was only good if you took your profits. Most people overstay their welcome. That's why I have so much concern for what's going on in the markets right now, because we have a lot of young people getting into the markets, which sounds like a good thing, and I do think it's a good thing, but the problem is they are not educated on what they are doing. They're following people on these social media platforms who they do not know, yet for some reason they blindly trust them. They think they're cool. And a lot of people, some of these social media influencers, they have a lot of money. They're millionaires, a lot of these people. So they can afford to throw some money around if they want to. If they lose 10, 20, 30,000, no skin off their back. They'll make it back. 10, 20, 30,000 is somebody who thinks stocks only go up. Betting on margin. Lose their shirts. And tragically, we're seeing some young people commit suicide as a result of this, learning the hard way. That's what concerns me. Markets are not supposed to be here for manipulation. Markets are not supposed to be here for revenge or to seek some sort of personal revenge because you don't like a hedge fund or some institutional investor or some type of CEO, etc., as we saw with the GameStop frenzy. And of course, we're going to await whatever Congress does in that respect. The CFTC, the SEC, Congress, if there's going to be some sort of financial transaction tax. We don't know what they're going to come up with, but they're going to come up with something. more regulations, more burdens, not only for these companies and these brokerages, but for the people. And for the little guy mainly. That's who it's going to hurt the worst. It's the little guy. But that was the whole story of the GameStop frenzy. This was the little guy versus the big guy. Just turning the tables. And of course, a significant amount of people got hurt doing that too. Because they were afraid of missing out. They didn't want to be left out. All of their friends, their family, oh yeah, everybody's posting on social media, look, I'm getting involved with GameStop. And they lost $500 here, $1,000 there, 10, 20,000 people taking out loans. People taking out personal loans. Average Americans taking out personal loans to get on the bandwagon with GameStop. And they lost their shirts. That's what concerns me. And you have a lot of irresponsible and reckless people who just don't give a damn about the average person. And they think it's cool. They think it's funny. And case in point, as far as I'm concerned, is Elon Musk. You know, I think the guy can have some net benefits to this planet by being an advocate for certain technologies and engineering concepts and doing this, that, and the other. But he's extremely reckless when it comes to a lot of his tweets out there. He has a lot of responsibility with the power that he holds. And to me, this is just somebody who has a lot of money acting like a jerk. You know, I think he has some good benefits, and I think he's, part snake oil salesman too. I think he's a little bit of a con artist in Elon Musk too. And I might get some slack for that. I really don't care. That's how I call it. Because that's how I see it. Because his stock, Tesla has no business being where it is, not even close. It was at $880 a share a month and a half ago, the beginning of January. Been going down ever since. Now, that's not to say that this isn't just some sort of correction, even though I do believe technically it entered a bear market, down 20% from a recent all-time high, and maybe it goes back up. Maybe it does. Same thing with Bitcoin. People pumping Bitcoin, and Elon Musk being one of those individuals as well. That was our podcast, The Bubble Buys a Bubble. When Tesla released the information that they had purchased $1.5 billion worth of Bitcoin. Now, maybe Bitcoin continues to go higher from here. Very well may. But it's a bubble. I've been trying to get a little bit more educated, with respect to Bitcoin. Watching some debates, people for it, people against it. And I have to tell you, I've yet to hear anybody who is a big supporter of Bitcoin make a very thoughtful and lucid argument as to justify its price level at these prices. And these people think it's going six figures. And it very well may, if you can convince enough people that that's what's going to happen. We have a very dire situation globally, economically speaking, politically speaking, socially speaking, the whole gambit. If people think they can get rich quick, this is their lottery ticket. If they think this thing can only go up, and I don't ever have to work again, and I don't have to deal with all of this despair and depression that's in my community, well, that's what they're hoping for. So this isn't anything fundamental. People try to make arguments for why it has some sort of fundamental use. I'm not buying it because Bitcoin does not have a monopoly on any type of use case. What it is used for, what it can be used for. The only argument I hear for a use case is, well, it's blockchain technology. You can use it to store your information so you don't have to have a whole bunch of different websites and companies storing your data, and you don't have to have a whole bunch of different passwords. You can just hold it right here in Bitcoin. Boom, presto, there it is. Well, if Bitcoin was the only cryptocurrency that could do that, I could understand the argument. I don't think it justifies prices at these levels. But I could understand the argument. Well, it's a monopoly. Maybe there's going to be demand for these services. Data, of course, is a huge industry. No question about it. It's only going to get bigger. But Bitcoin is not the only cryptocurrency in town that does this. It's not. There are others that are more efficient. There are others that don't use as much energy. I'm not arguing against blockchain technology. That technology is going to be with us for a long time, and I think there could be a lot of great things that come from it. But Bitcoin, there's just no argument that it's a store of value. That's ridiculous. Look at the volatility in it. You really want to trust some sort of store of value with this type of volatility? It makes no sense at all, and it doesn't have a use case. You can't change the properties of gold or silver. And the other thing that I just have to question with respect to this too, gold and silver have withstood the test of time. This economic situation in which we are in, I put a lot more trust in the precious metals than I do in cryptocurrencies, which have only been around for a decade. We are in an economic experiment the world has never seen, size, scope, duration. And people are jumping in to cryptocurrencies, into Bitcoin, as to somehow be the savior of all of this. I never hear somebody who's an advocate for Bitcoin really argue articulately as to how the government will be unable to regulate or shut it down. They just say, well, there's going to be a network effect, there's going to be adoption by other people and by corporations, and it's going to make it more difficult. That's a bunch of hogwash. There's a bunch of things that are accepted all the time by corporations and people that the government comes in and regulates. Gold and silver actually used to be money, if you could believe it. Legal tender, as it's supposed to be. It's outlined in our Constitution. Well, when you go to the store, are you trading gold and silver? No, you have pieces of crap paper in your pocket. What difference is Bitcoin? The belief that it's going to do something. We already hear the bad-mouthing of Bitcoin all the time from governments and from central banks. And there are other technologies, there are other cryptos out there that are more efficient and more effective. I just don't get it. I understand you want to get rich quick. I understand the lottery ticket mentality. I understand the blockchain technology, but putting all of this behind Bitcoin to me is ridiculous. You want to put your money, it's your money. It's your risk. More power to you. That I am not demonizing. But the arguments, just admit that you're riding a wave, that you want this thing to go to six figures so you don't have to work anymore. That's all I want to hear. Don't give me all these BS arguments that can be dismantled extremely quickly. And then people who advocate for it, once they're hit with these logical questions and arguments, they go ballistic. They start the name calling, they get loud. And as soon as you start the name calling and getting loud, well, you've lost the argument. And that's what I see when I start listening and reading and watching, a handful of different debates out there with respect to those who are for Bitcoin and those who are against it. That's all I'm asking for. But these markets are a joke. So you cannot be surprised that we witness this type of behavior day in and day out. The only question is, how much further does it continue to go? Will the additional fiscal spending, will the additional monetary action, will that continue to move markets higher? Or are the markets going to say enough is enough, which might be what we're starting to witness with these yields creep up across the Treasury market? Time will tell. But nonetheless, these markets are a joke. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Koritis. Godspeed.